So what does it really take for a manufacturing giant, one with a legacy stretching over 6 decades, to not just innovate, but also keep expanding globally? Today, we're embarking on a deep dive into APR Industries Ltd. They're a company playing a really critical role in shaping energy, transportation, and telecommunications worldwide.
Yeah, and our mission here is simple, really. We want to cut through the noise for you. We've got their latest Q1 FY26 financials, the corporate presentations, the full earnings call transcript, everything. The goal is to distill the most important insights, get you up to speed quickly on what's driving their growth, the challenges they're facing, and, what it all means.
Absolutely. And honestly, when you see how APR blends this global ambition with a really cutting-edge innovation and a commitment to future solutions, even the dense financial stuff, it gets pretty compelling.
Okay, let's unpack this. So kicking off with the headline figures from Apar Industries Q1 FY26, that's the quarter ending June 30, 2025. They reported, well, very strong consolidated results. Revenue from operations climbed significantly, up 27.3% year over year. That hit 5,104 crores. And this surge was mostly fueled by really robust domestic business growth. That part was up an impressive 38.3% year over year.
Right, and their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, the core profitability measure that also saw a healthy increase, up 27.0% year over year, hitting 501 crores. And they maintained a solid margin of 9.8%. Management said this came from strong volume, executing on those high-margin orders, and a good mix of products, plus strong U.S. performance.
And finally, profit after tax, PT, and net income. That increased by nearly 30%, 29.9% year over year, actually reaching under 263 crores. Paid margin landed at 5.2%, pretty solid. But what's particularly interesting, I think, is the export dynamic. While overall revenue jumped, the export mix actually dipped a bit. It was 31.6% in Q1 FY26, down from 37.0% the year before. However, and this is the key bit, if you look within exports, U.S. revenue specifically just soared, up an incredible 111.3% over Q1 of last year.
Wow, 111%.
Yeah. So that raises a big question, right? What specific factors are driving that regional boom, especially when some other export areas seem a bit slower?
Good question. And just to give everyone a bit more context on APR sheer scale, this company is the world's largest manufacturer of aluminum and alloy conductors. They're also the third largest globally for transformer oils and number one in India for renewable energy cables. Their FY25 revenue was huge, 18,581 crores, about $2.2 billion US. And they've managed a 5-year compound annual growth rate of over 30%.
It's impressive growth. And fundamentally, their strategy is built on this mission they have, designing and making building blocks for energy infrastructure, transportation, and telecommunication sectors. The aim is making the world more energy efficient, sustainable, and safer. Their vision, to be a global leader. And it's driven by values like innovation, being proactive, entrepreneurship, accountability. You get the picture. It seems to really guide what they do.
Okay, so let's break down where these impressive numbers are actually coming from, segment by segment. Let's start with the conductor division. This saw, well, truly exceptional growth. Revenue shot up nearly 44% year over year, hitting 2,785 crores. They said this was largely down to an improved product mix, better pricing realization, and solid volume growth too, up 17.5% year over year.
Yeah, and digging into that a bit,
Right.
the domestic business for conductors was incredibly strong, up almost 63% year over year. That really helped make up for a lower export contribution overall, which was about 20% compared to nearly 30% last year. But here's that U.S. factor again. Even within conductor exports, U.S. revenue grew by nearly 83% over Q1 FY25.
Still very strong there.
Exactly. And their premium product mix also jumped significantly. It hit 43.5% in Q1, up from 37.1% the previous year. And that directly boosted their profitability per ton. EBITDA per metric ton reached 43,688. Now, you asked before, what specific premium products? Well, management pointed to better execution on HTLS conductors' high-temperature low sag, crucial for upgrading power lines efficiently, and also specialized copper stuff like overhead railway conductors, copper transposed conductors for transformers, and bus bars.
Right. And it's not just about volume, is it? APR is the biggest conductor maker in India, a pioneer in aluminum alloy rods, dominant in things like AL59 conductors. But what really seems to set them apart is this end-to-end capability. They've done over 165 turnkey projects handling everything from design to installation. And their order book looks solid too, pending orders at 7,779 crores. And they booked another 8,135 crores just in Q1, shows demand is still strong.
And if you connect that to the bigger picture, There's this increased focus, especially domestically, on reconductoring existing lines. Right-of-way issues make building new lines hard, so upgrading existing ones is key for efficiency. APR's full solution approach gives them a real edge there. They can manage the whole complex project, not just sell the wire.
Okay, let's shift gears. Moving on to the Specialty Oils and Lubricants division. This segment looked, well, pretty stable this quarter. Revenue was flat year over year at 12,262 crores. But interestingly, volume was actually up 8.1%.
Right. So what's happening there? Global transformer oil volume increased by 7.4%. Domestically, it grew significantly, up 20%. Automotive oil volume grew 8.4%. Industrial lubricants up nearly 16%. So demand was there. However, the overseas business was slower. They mentioned project delays in key markets like Saudi Arabia, South Africa, Australia. That dragged the export mix down to about 37% from 45% last year. Management seems to think it's temporary, just project timing.
A timing issue, okay.
Yeah. EBITDA per kiloliter was 7,004. And if you think about the broader market for these oils, it usually grows maybe 2–3%. So APR managing 8% volume growth, even with those export delays, that's actually outpacing the market quite a bit. Signals strong underlying demand for their products.
And their leadership position helps, I imagine. Third largest globally in transformer oils, biggest exporter from India, over 350 specialty products. Plus, those global approvals from major utilities and OEMs, original equipment manufacturers, that's crucial.
Absolutely crucial. Now let's talk about cable solutions. This division showed really remarkable growth this quarter.
The numbers certainly suggest that. Revenue soared 36.3% year over year to 1,419 crores. And this was largely driven by exports, right, which grew an amazing 69.7% year over year. Domestic revenue grew solidly too, up almost 20%, contributing to that great overall number.
But here's the really surprising bit again, U.S. sales and cables. They jumped an astonishing 136.6% compared to Q1 last year. And the overall export mix for cables increased significantly, up to 41.3% from 33.2%. So again, that question, what specific event or trend causes such a massive spike in U.S. sales in just one quarter?
Yeah, that's dramatic. Management did explain this one, actually. They said this exceptional U.S. growth was partly because customers pulled forward orders, trying to get products in before an August 1st deadline. Seems they were anticipating potential tariff changes between India and the U.S., so a bit of tactical ordering.
Ah, okay, that makes sense. A pull-forward effect.
Exactly. But even with those dynamics, EBITDA for cables grew strongly, up 32.2% year over year to every 142 crores. Still a healthy margin of 10%. And their pending order book for cables is also strong at 1,653 crores.
And this connects back to their unique position, doesn't it? APR is India's largest exporter and producer of specialty and renewable cables. They use that advanced E-beam technology electron beam for things like house wiring. Gives it a 50-year life, superior properties. Plus, they're a leader in India's renewable space, solar, wind cables, and they support critical sectors like defense, railways. They're the biggest cable supplier for those Vande Bharat trains.
Right. So beyond the numbers of the segments, let's zoom out a bit. Look at the bigger economic and geopolitical factors shaping APR's journey. On the industry trend side, India's renewable energy sector is booming, strongest growth in 3 years. Power generation up 24% in the first half of 2025 compared to last year. June alone saw 7.3 gigawatts added, 4 times more than June 2024, mostly solar and wind.
Huge growth. But then there are these transmission and distribution, or T&G, gaps. That's both a challenge and, well, a big opportunity. Q1 FY26 saw loads of new substation capacity added, over 22,000 MVA, more than double last year. But transmission line additions, way below target, only about 1,000 circuit kilometers versus a target of 6,000. These delays, mostly due to right-of-way issues, forest permissions, it creates this massive pent-up demand for T&D infrastructure.
Bottlenecks creating future demand.
Precisely. And then there's digital transformation. Telecom, 5G, data centers, rural connectivity all need huge amounts of optical fiber, copper, hybrid cables, another big opportunity space.
Okay, so lots of positive underlying trends. But when you connect this all to the bigger picture, what's the main worry? Management highlighted geopolitical tensions, right? Specifically, the uncertainty around the India-US trade deal and these evolving tariffs. That seems to be the major short-term cloud.
Yeah, exactly. And those tariff complexities are, well, complex. For Indian exports to the U.S., currently there's like a 10% reciprocal tariff plus a 5% basic duty, so 15% total. But then the U.S. also has this Section 232 tariff, 50% on strategic materials like steel, aluminum, copper. And that applies to all imports, even raw materials for U.S. manufacturers using imported stuff.
So it creates a lot of uncertainty about final cost.
Exactly. It makes things very fluid. U.S. clients are apparently delaying orders sometimes, waiting for clarity on their landed costs. And that raises the question for APR. How do you stay competitive internationally, especially when you face things like subsidized Chinese exports and non-U.S. market subsidies that can be like 8, 12%?
So what's APR's strategy to handle this? Well, they seem pretty pragmatic. Prioritize domestic opportunities where possible, or seek the best net back, the best return in exports. They leverage their manufacturing flexibility. And crucially, for new orders, they're not taking the tariff risk anymore. Tariffs are now a separate line item. The client pays. It's a business decision, right? Project delays caused by tariff uncertainty cost more than the tariffs themselves.
Makes sense. Shifting the risk.
So despite these macro headwinds, APR isn't just sitting back. They're actively investing and innovating. On the investment side, they've got a big CapEx plan, 1,300 crores by June 2026. They've already spent 150 crores in Q1, another 250 crores expected soon, expanding capacity across divisions, enhancing flexibility.
And their innovation focus is interesting too. Customer-centric stuff like pre-connectorized solutions for windmills, making installation faster, or unique hybrid cables mixing fiber and copper for quicker, cheaper network rollouts. Practical stuff.
And they seem deeply committed to sustainability too. ESG, environmental, social, governance. They put out their first TCFD report task force on climate-related financial disclosures. That's about transparency on climate risks. And Creasel ranked them third among industrial companies on ESG factors.
Yeah, and what's fascinating is the concrete action behind it. They commissioned a wind-solar hybrid power plant, 3.3 milliW wind, 2.8 millibubba solar, expected to save 10,000 tons of CO2 equivalent greenhouse gas emissions a year. That's substantial. Their Scope 1 and 2 emissions are independently certified too. And this commitment really helps, especially in Europe where ESG criteria for tenders are getting stricter, gives them a competitive edge.
And it's not just environmental. Big social initiatives, too, supporting hospitals, universities, providing free midday meals to 1 million kids daily through the Anna Marita Foundation. It's quite broad.
It is. And one other detail, on financial discipline. Their finance costs went down, not because of major debt repayment, apparently, but better working capital management. They're using more cash and internal accruals for purchases, relying less on things like letters of credit. If you connect that to the bigger picture, it just shows good operational efficiency, strengthens their finances, reduces risk.
Okay, so what's the overall management outlook?
They sound optimistic.
Yeah, fundamentally optimistic.
Yeah.
Expecting domestic business to stay strong across all segments. And while those transformer oil exports saw delays, they expect a pickup as projects get back on track.
I think the key takeaway from management is their confidence. Confidence they can navigate these current uncertainties. They're guiding for 25% value growth in cables, 10% annual volume growth for conductors. That's pretty bullish given the landscape. And they also sounded, somewhat optimistic that those Chinese subsidies in non-U.S. markets might not last forever. They've seen similar things reverse before, so maybe a more level playing field eventually.
Right. So wrapping up, we've navigated through Apar Industries Q1 FY26. We've seen strong growth, mostly driven by domestic demand. Strategic investments are happening, innovation's key. And there was that surprising surge in U.S. exports for some products, even with all the geopolitical noise.
Yeah, what really stands out to you as you think about this deep dive? For me, it's that APR is clearly playing the long game. They're focused on essential sectors, energy, transport, telecom. They're leveraging innovation, sustainability, weathering these short-term storms. And their ability to adapt, like passing on those tariff risks, that really highlights their resilience, I think.
Absolutely. So what does this all mean then? In a world that's increasingly focused on energy transition, on critical infrastructure, APR really seems to exemplify how a legacy manufacturer can keep evolving, how they can adapt and turn these complex challenges into real opportunities for growth and global leadership.
Which really raises that final important question, doesn't it? As global supply chains keep shifting, as the push for renewables intensifies, how will companies like APR, with this unique blend of local strength, deep technical know-how, and global ambition, how will they actually redefine the future of industrial manufacturing? How will they ensure critical infrastructure gets built for tomorrow? That's definitely something for you to consider as you watch this space unfold.